Lunedì mattina siamo di nuovo sul floor del New York Stock Exchange, inizia un'altra settimana per l'azionario americano, settimana che inizia in realtà con un tono negativo, ne parliamo con il mio ospite qui sul floor che è Kenny Polcari, Managing Director per ICAP Equities. Kenny, thank you so much for being with us.
Thank you for having me.
So Kenny, as I was saying, we are starting the week with a negative tone, and Europe is back again.
Europe is once again at the top of the spotlight, right? It started on Friday afternoon. We're worried about Greece again. Were they going to come up with a solution over the weekend? And, you know, listen, we've been here before. We've been disappointed before. Clearly the market is concerned again because now it's Monday morning. The weekend has gone by. Although they keep saying that they're talking, there's still no visible resolution. And so it's causing just global concern once again because we keep getting one day closer to March 20th. At some point, someone's going to have to pull the trigger.
And now the Germany idea also is carrying the market a little bit, the imposition on Greece.
Right, the imposition where they want to really have a veto power over Greece's budget and essentially take away the Greece sovereignty, at least temporarily, until the situation's under control. You know, that's certainly not going over well, not only in Greece, but certainly in Europe. I don't think it's really going over well, because if they do it in Greece, then what would prevent them from doing it somewhere else in the event that it got out of control? So that idea is not going over too well, and certainly adding some concern and nervousness to the marketplace.
Now, going back instead of our U.S. economy, we saw this morning some data that they are amplifying the fact that maybe we cannot see consumers supporting the economy in the next few months.
That's right, and see, that's not surprising to me, because if you're here in this country and you live in this country and you talk to people in this country out in the street, you understand the concern, and so that's in stark contrast to what the government has been telling us about how the consumer's going to come back, the consumer's coming back, everyone's feeling more confident. In fact, people are not feeling that much more confident, and I think it's clear in today's numbers. That obviously is also not helping the market tone and sentiment today. But don't also forget, the market has gone really straight up since mid-December with no real pullback. So having the market actually come in would not be a bad thing. It's got to take a little bit of that exuberance out of the market, if you want to call it that. But watching the market come back to, we've broken through 1300 now. I would not be surprised to see us go to essentially like the 1275 level. We might stop along the way, but 1275 would be the level of real support. 1300 was a psychological number, and if we don't end up closing above that today, then you can expect the market will test lower.
Okay, and we cannot, avoid talking about, you were saying what the government keeps saying to us, that the data, we saw December job market data that were like surprisingly very, very good. No, nobody really believed 100% in those numbers. And now we have new numbers again coming on Friday. What do you expect?
Well, we got numbers coming on Wednesday, ADP, which will kind of be the precursor to Friday, right? And now the number already on Friday is estimated to be 150,000, which would be down 50,000 from the last report. And so once again, it just goes to the fact that people are not really believing that number last week. It was the number last month. It was an aberration. Maybe it was the end of the haul, temporary jobs, all that stuff. And so people are going to once again start to really focus on where the job growth is coming. And if they really believe that the job growth is coming. And I think once again, there's going to be some concern about that. I think that we're in, and listen, Ben Bernanke said it last week when he talked about extending rates out. He's very concerned. So clearly there's a disconnect between how he's feeling and what some of these reports are saying. So I think it's a caveat emptor kind of a market. Buyer beware.
Now, a very short comment on what it probably could be the news of the week. IPO, big IPO, Facebook might come end of the spring, beginning of the summer.
Right, and I think, listen, that's also not necessarily new. People have been kind of talking about that for a while, but now this week, will they actually file? Will it become a reality that they're going to file? And then that means ultimately, whether it's April or May, that they become a publicly traded company. And how big it'll be. And listen, it's exciting. Everyone understands kind of the size of it and really understands how it has changed. The fact is how it's really changed the world in a number of ways. And so certainly people are talking about it, but there's not a whole lot you can do about it until it actually becomes public. News of the filing is all exciting and everything, but we've been expecting that. So I think the media is making a big deal about it because it is a big deal, but there's nothing anyone can do until it actually starts to trade.
And there is no one else really that can excite investors at the moment.
Well, listen, not the way that Facebook can excite it. Listen, we're going to have a lot of IPOs this week and into next week, but they're not anything like Facebook. But all that does say is that the IPO market is healthy, that there are asset managers that are looking to deploy cash, and so they're looking at these different opportunities. Certainly, Facebook will be one that will dominate the headlines for years to come.
Great. Thank you very much for your insight, Kenny Polcari.
Grazie lei.